Good morning, everyone. This is Financial Literacy 101, and today we will be reviewing Aphria. Aphria is a Toronto, out of Canada, cannabis stock. So yay, cannabis. And that doesn't mean if you smoke, but this is about investments. It's not about edibles or oils or the leaf or the, never mind. But you get what I'm getting at. So it just depends on what you want in your cannabis diet. I mean, that's if you have a cannabis diet. Who really knows, right? But anyway, so Aphria has been doing fairly well. They've been pretty much rocky a little bit, but nonetheless, I believe that it's imperative that we learn about this stock to see if it's a good investment, okay? If it's a good investment. So let's go to our friends and let's review Aphria and let's learn about this particular stock and see if it's a good investment or not, okay? All right. So here we are. So today they're down a half a point. All right. Let's look at their line chart here. 5 years. And they haven't even been out 5 years, a fairly new stock, but they've been down 62 and a half. So they was listed on November 2nd, 2018. So yeah, they've been out roughly 2 years, okay? Almost 2 years here in November. The past year, they've been down 28.10. The last 3 months, they've been up 20%. The last month, they've been down 10.7% or 10.8%. And then the past week, they've been down, okay? So a lot of times I like to do stock review. Understand that we're going to do an analysis if you should invest or you shouldn't invest. And if you do invest, how you should invest. Or, you know, that's my opinion of what I think you should do, okay? So let's talk about it. Aphria engages in the production and supply of medical cannabis. Okay, medical. So if you guys are looking for recreational, I'm pretty sure you can use it as well. Anyway, operates through the following segments: cannabis operation, distribution, operations, and business under development. The cannabis operation segment produces and distributes and sells both medical and adult use cannabis. Both medical and adult use cannabis. They mean recreational. That's what they're getting at. The distribution operating segments are carried out through its wholly owned subsidiaries, APB, FL Group, and CC Pharma. The distribution under development segment includes operations in which the firm has not received final licensing or has not commenced commercial sales from operation. Now, the company was founded by Cole, yes, that dude's name, in 2013, and is headquartered in Leamington, Canada. It was founded in 2011, has roughly 1,200 employees, and that's pretty much it. Their value was about 4.80 million, okay? Collections is in technology, one of the 100 most popular stocks, most popular under 25 stocks, health, medical, Canada, North America, and 28 IPO. Okay, those collections, those last connections really don't mean anything, okay? All right, so what is the news saying now? The news is as of August 19th, so 2 days ago. It says Global Legal Cannabis Market 2024, featuring Aphria, Bang, and Cannabis Growth, among others, okay? We'll get into some of the news stories and see what they're actually talking about. This has 83% rating to buy, 17% hold, but 0 sell. That's pretty good. Aphria has been strengthening its presence in Germany. And let's read a little bit more of this one. That seems interesting. It says most attractive international medical markets. It acquired CC Pharma in 2019, giving it access to nearly 70% of pharmacies in Germany. So this is the Canadian company that operates in Canada that's now operating in Germany at 70% of the cannabis market, okay? So let's look. When I'm looking at this particular stock, I'm not looking right now. I want to look out to maybe September, October to start seeing some returns. But because of COVID-19, people have decreased their consumership. They have decreased the amount that they're spending every month. So this is something I probably want to do probably all the way to the end of November because of the U.S. presidential election. You're like, well, what does that have to do with anything? When it comes to stocks, doesn't matter where they're listed. Americans, we are the hugest consumers. If you don't think that Americans in Washington, that Americans in New York don't go over the border to buy marijuana, they do. Now, granted, Washington State is legal to smoke recreational cannabis. I don't think New York is, but believe me, there's a lot of people going over to Canada buying marijuana. Okay, whether it be for medical reasons or health reasons. Okay, medical reasons or recreational reasons. So it just depends. Aphria's focus on strategic SG&A spending and running a lean business model allows it to have a healthy cash balance to fund future operations and investments. Okay, Aphria's careful approach to expansion has allowed it to reach profitability faster than any of its Canadian peers, and we're talking about Aurora and also Cannabis Growth. Okay, those are some other cannabis stocks that I've actually done reviews about. Let's see if anything pertinent here. The existence of the black market limits the potential price increases Aphria can push through to its consumer. That's something notable to note. The existence of the black market limits the potential price increase Aphria can push through to consumers. So basically saying when they say the black market, they're basically talking about unlicensed drug dealers, okay? Because, essentially we called back in the day marijuana as a drug. So let's just say unlicensed drug dealer versus going to a what you call these places, dispensary, a medical dispensary or a recreation dispensary, because it dispense marijuana. That is the difference. You got your guys on the block, on the street, at a home, at a house, somebody they're not licensed, so they're unlicensed drug dealers. Okay, because essentially when you go to the pharmacist because you have a prescription, there are licensed drug dealers. That's just a cool name. They call them pharmacists, but they're drug dealers anyway. Legal drug dealers. All right. Quarterly earnings. From the second to third quarter, they was doing really, really well. But this fourth quarter, it looked like it was going down. What's great about this is there's a lot of value in this stock. And this is the time. I'm gonna let the cat out the bag. This is the time to buy. Because right now we're going that pullback date, we're doing the market correction. We see that a very profitable stock is now decreasing in its value. Okay, decreasing in its value. So other people also bought Chronos Group, Royal Cannabis, and Cannabis Growth and Hexo. All right, we understand the Cannabis Growth is doing pretty well, but this is still a very, very valuable stock where we're going to get into some other things. So let's look at some of these options. If you missed my first part of my option trading last night, it was very informational, very informational. This kind of give you some definition of some things, some terms, and some strategy, but not getting into the technical data, not yet. That's still to come. So let's look into the options of this. Now, if some of you are looking to buy shares and hold, then do so, but understand inflation plays a big role. That's why if you notice, I buy some shares in some companies and I buy some options in other companies. Like my shares, my 0.26 shares, again, my 0.26 shares of Tesla, because I invested in fractional shares in Tesla, has already made me $125 at a 30% return. And we understand anything over 10% is good, anything over 20% is great, and anything over that is excellent, okay? Anything over that is excellent. So I'm looking at my strike price. Right now they're 449. They're definitely going to reach 4.5. So where's my profitability? So if I can buy it low here, my break even is at 3.5%. Break even at $4.65, but I can buy it at 4.5. What we need to look at is for this particular one, I never showed you guys this, but I should have a long time ago. First thing I'm going to do, I'm going to change my date. I don't want this a week out. I want to go all the way to October. I don't want to go to November. Now my break-even price is $5.14. You know why? Because my implied volatility has changed. And we're going to get into implied volatility. I'm going to break it down, okay? So I'm going to go get some more detail. Ooh, My implied volatility is at 91%. Okay, it's at 91%. I'm looking at the Greeks, nothing, yeah. So let's get into implied volatility. Good morning. Let's get it. Came in late and a clan killer. Yes. What's your opinion on LI Auto? Hey, clan killer, if you look at my previous videos, I did a stock review on LI Auto and I've actually bought some. Okay. So look into that, clan killer. It's one of my stock reviews. You all say Cleveland Cliff is growing. I need to buy some before it goes over 7. Okay, we'll look into Cleveland Cliff very briefly though. Now, the implied volatility here is shooting off the roof. As you see that based on the market, it's in fluctuating and defluctuation. But let's learn about implied volatility. Implied volatility. So implied volatility is the market's forecast of a likely movement in a security price. We're talking about options. Implied volatility is often used to price option contracts. High implied volatility results in option with higher premiums and vice versa. So let's get into some details. What is a good implied volatility? So implied volatility for these options is 30 to 33, but right now buying demand is high, blah, blah, blah. If you want to buy those options at a strike price of 50, the market is 2.55 to 2.75%. Fair value is 2.64 based on that 5.5 volatility. Disregard what I just said on that one. That made no sense. Let me break it down a little bit better. So here it is. Is implied volatility good or bad? That's the question you're asking yourself. So when implied volatility increases after a trade has been placed, it's good for the option owner. So right now, if I would have bought this at a low at 91%, you see how it went up to 99? I would have made great money that quickly, okay? It's good for the option owner. So I'm buying an option, so I would be the option owner, and bad for the option seller, the one who lists the option on the option market. Conversely, if implied volatility decreases after your trade is placed, the price of the option usually decreases, okay? That's good if the option seller and bad if you're the option owner. So if you're the option owner and the implied volatility increases, that's good for you, and it's bad for the option seller, okay? If it decreases when you get it, it's bad for the owner and good for the seller. So again, you know I absolutely hate buying options on here. So let's go back, but I will show you. Let's look at this. I'm about to say there's no way I'm up $7,000 today, but anyway, that looked pretty good. So bear with me, and I'll show you the options that I'm buying. For some reason, I don't do well on their desktop platform, okay? So I'm going to trade options. Okay, I'm right here. And I want to go out until, was it October 16th at a $5 strike price. And for every option is $42. So I want to buy around 5 options, which is $210. Let's see if Robinhood allowed me to deposit $215 today and access. I'm doing it well. Okay, good. I'm going back. Let me refresh. $5, 5 options. Boom. And I bought those. So let's look over and see if they're live. It says it's placed. So it may not be live yet. Okay. I'm going back to my portfolio. And I'm only up $218 a day. My NEO, I bought some options last night for NEO for August 28th. So let's see how I'm doing on NEO calls. All right, let's look. Wow, I'm up $90 a day on the options I bought last night on NEO. I'm up 34% on my portfolio, okay? That's it. Let's see, 6-7, let's get it says, any books or do you have videos, playlists on how to start with this and learning the terminology? Definitely. So every stock review, let's get it. I break down certain terminologies for you to understand. But if you look on my YouTube, I have playlists of different subjects, whether it be debt management, credit, investing, stock tips, and review. And also in the description of this video, you'll see that in my email, and I also teach financial literacy. I teach people how to get out of debt, save, invest, etc. Okay? And good morning, Nolan Baptiste. Anyway, before we hop on this, in my portfolio, let's go over to Market Watch to learn more about Aphria. Okay? That's what we're talking about today. We're talking about Aphria. Let's look at them. So they opened today around $4. Okay, we got it. You're gonna keep popping it up. All right, $4.55. The 52-week range. Look at the 52-week range. They came out at $1.95, and then within a year they went up to $7 and 14. So now they're down at was it $4.50? Okay, so that's why I say it's probably good to buy options right now when it comes to Aphria. But you want to wait till after the election. I think that's when things are really going to start getting moving, especially if you guys are investing into REITs, real estate investment trusts, okay? Those virtual real estate companies that you can actually get dividends and also potential for growth in those particular stocks, okay? So their EPS is a negative 0.23%. So they're a little bit in debt, but ladies and gentlemen, a lot of times the EPS is just good information. That's it. It doesn't mean that it's going to hurt their stock price or increase the stock price, but it's kind of like the piece of the pie. Okay, it's kind of like if a pie was layered. If a pie is layered, like the crust is about that thick. Let's say if the crust is about that thick, okay, and someone shaved off that much, you wouldn't really notice, but it's still part of the analytics of learning a stock. Okay, and in some cases, it really does make a big difference because sometimes the EPS could be the crust of a pie. So it could be the crust of a stock, okay? Especially when someone EPS is like $8, okay? $8 and only paying a dividend of $1, okay? All right, see what else they have saying. What to expect from Chronos. We already did Chronos. Aphria leads pot stock sell-off after reported wider than expected losses. But we're going to get into that, okay? Because we're going to go over to the Motley Fool and we're going to read just a little bit about Aphria, okay? So here it is. This whole story is basically telling you the downfall of Aphria, okay? The ups and downs, but it's still beating out certain companies. So let's read this. The verdict. Cannabis stocks tend to be pricey, but in that department, Aphria fares better than most of its peers. The company currently has a market cap of $1.29 billion, along with a forward price to sales ratio of 2.4, compared with Cannabis Growth and the Chronos Group, whose market caps are $6.38 billion and $1.97 billion, respectively. Cannabis Growth and Chronos Group also have higher price to sale ratios at 16.6 and the former 45.6 for the latter. Overall, Aphria brings in higher net sales than most of its competitors, has been profitable more often than them, and is also trading at a cheaper valuation. Let's talk about Motley Fool. Really good source for information. And the key term, the key point in this is when they said trading at a cheaper valuation. Automatically, that makes me think about the PE ratio, meaning that this is an undervalued stock. This is an undervalued stock. It is trading at a cheaper valuation. Okay, if you guys was part of the class last night, we're talking about essentially a part of this is intrinsic value, that inherent investor thinking about that this stock is undervalued. Okay, so it's going to have to take some time where the economy stabilizes itself, because the economy is not stable. Just because the stock market is doing well or is doing bad, it's very volatile. It's not stable. Right before COVID-19, the market was actually stable. It's not stable anymore. So anyway, for those reasons, I think Aphria is a buy, and it's one of the best cannabis stock investors can purchase right now. Okay, so that's why I went out and I bought 5 options all the way out till November. Let's see if they posted this on my, yes, they did. Yes, they did. So I'm down 0.23%. Let's look at this. Because my implied volatility, okay, let's see what the compute said. It has not got in. My break even price is at $5.42. So I'm going to have to wait for that. So I'm going to be down for a while. Okay, let's read some of your notes, guys. Let's read some of your notes. Let's see what we have going on here. Who is in the chat room today? Okay. Clan Killer asked me my opinion on LI stock. I told you I did that stock review and I actually bought some. I think I sold LI Auto. I'm gonna have to go back to my portfolio. Let me look at this really quick. Am I keeping LI Auto or did I sell them off? DJ. Yeah, I think I sell out my LI Auto. But you can go and look at that stock review because LI Auto is going to be a while. They came out the gun. They came out the race, really fast. It's like, it's a marathon. Investing is a marathon, not a race unless you're a day trader or a week to 2 week option trader. But it's a marathon. So what else do we have here? I don't make sure I don't want to ignore you guys. Read as much as I can. Let's get it. Say, okay, thanks. I definitely get on it. Good. It's good about learning about investing, guys. It really is. It says, I see a potential in Exogen. Okay. I'm kind of tempted to sell my Hymax and buy some crypto. I want to learn more about crypto for the long-term plan. Oh, okay. Manola Baptiste said, Ms. Ross, can I please have your opinion on Ameritrade? Investing in Ameritrade or investing in Ameritrade or investing with Ameritrade? That is the question, okay? That is the question I want to know. I think Ameritrade doesn't have, do they have a stock? I don't think they have a stock. They do have a stock, okay. Let's see, 37. Let me know, because right now they got it at an 80% hold if you're talking about investing with Ameritrade. If you're talking about investing with Ameritrade, they have it at 80% hold on Robinhood. Let's look at their 5 years. Okay, they've been doing pretty well. 3%. Let's look at the last 3 months. Last 3 months, they're 10%. They jumped all the way up to $47. They're at $37. They probably doing dividends. They are. Their price earning ratio is 10.82. If you're investing in Ameritrade, I probably would do options right now because they took a hit October 19th. There's nothing really significant in the market that really happened that day. All the stock reviews I be doing. Now, if they just would have took a hit March, I would have said, yeah, probably a good buy and hold for a couple of months, maybe a year, but don't let inflation decrease your portfolio value. If you're investing in Ameritrade, I know that I won't be. This is my personal opinion. You have to make that decision for yourself because, I'm a big firm believer in I can give you the information, but at the end of the day, it's up to you to invest. And when you invest your money, okay, when you make money, thank me. And when you lose money, thank the market. It's not me, okay? It's not me. But at the end of the day, this is your sole decision. But for me personally, I will not be investing in Ameritrade. Now, if you're going to invest with Ameritrade, then you want to make sure they have free commissions. They don't have monthly fees, anything like that. Something like Robinhood, Webull, basically. And also, let's get it. If you want to start investing in fractional shares, Robinhood as well as Webull does that. And I have links in the description of this video that you can look at. And Clan Killer, I have not forget, we're going to go over to Cleveland Group. If I can spell Cleveland. Wow, I messed that all up. I don't know how the hell 2 C's, that's why. Don't judge me, guys. Don't judge me. Everybody, let's see. Why didn't I bring up Cleveland Cliffs? All right, let's look at this one right here. Cleveland Cliffs. Let's look at them. 71% hold. Let's look at the time chart. It should be new. Okay, past 5 years, 86%. That's really good. And you said before they hit $7. Let's see. 1 year, they've been down roughly 26%. The past 3 months, they've been up 40%. Okay. Last month, 9%. Last week, 1%. Yeah, this is solid. They got dividends at 3.74%. And guess what? Dividends don't mean the world because when we go over and we look at, let's look at this. What am I doing? What am I doing? CLF. That's what it is. CLF. I'm going to show you about these dividends. It's not, a lot of times dividends are not worth it, okay? Even though I talk about it. Look at the dividends. 6 cents. That inflation alone would kill those dividends. So for a stock like this, you're looking for potential growth. That is what you're looking at. You're looking at if this stock is undervalued, okay? They're a profitable company because they're right over being negative of their EPS. They have solid numbers. They're doing fairly well. And right now the market is volatile. So, but over the past, they've been doing fairly well, okay? So if you look at the analytics here, up and down, if you can invest on a pullback day, if you can invest on a pullback area, and then wait for the peak. Because if you notice, stocks have a rhythm. Look at this rhythm. Up, down, boom. And you have to look over the course of a year. It's kind of like last night at option trading, I was teaching about you have to really look at how a stock evaluates itself over the course of time. And a year, it's a really, let me see if I have my notes from last night. I do not. Give me 1 second, guys. Let me go back to my notes. I think I still have them. But it's something I want to make sure that I tell you this correctly because I wrote all these notes and I want to make sure I tell you correctly. Let's see here. Nope, that's not it. I didn't get into out of the money, in the money last night. It was a reason for that. What else? Give me 1 second. No, it did not save my information from last night. But basically what I was talking about is that you look at how a stock performs throughout the year. And if you can do 2 or 3 years, that's perfectly fine. But if you're investing now, you look how that stock did last year during that time, and stocks kind of like have a regular routine. Now, COVID-19 has really changed a lot of way that stocks have been performing and their analysis, but usually stocks have a rhythm because the stock market, again, is very emotional. It's very emotional. So during certain times, people are feeling great, they invest. People are feeling bad, people don't. If you notice, people do less investing during the holiday months, right around November, right around December. So that's why I put my option out until November, because right after the election, stocks are expected to go up and then down because people are buying turkeys, people buying all these things. Then, of course, you got Christmas, okay? But I may even sell that option before November. I might sell that option in October. So, again, when you're doing option trading, you don't want to take that option all the way out to the expiration date. You don't. If you got a 2-year option, you want to sell it around 18 months. If you have a year option trade, you want to sell it around 6 to 9 months. If you have a 3 or 4 month option, you want to sell it around 1.5 months to 2 months. Because the closer you get to the expiration date, it increases its volatility because of pullback dates and also market correction dates, okay? So that's very imperative for you guys to understand that when it comes to option trading. And if you're going to hold it for the long term, look at the potential for growth. Like right now, Tesla is hot. Amazon is hot. Apple is hot. So those are some of the big boys that instead of trying to spend all your money and buying a whole share, like, man, I don't have $3,000 to buy an Amazon. I'll show you my Tesla stock. I don't have a whole entire share of Tesla. I'm not rich, but I have enough money to invest a little bit of money. So let's look into my Tesla stock. Let me get it set up for you guys so you see exactly what I'm talking about. Here we go, okay? So here's my Tesla stock. Okay, no. That's how much Tesla is. That's not my stock. Down here is my stock, okay? It says that I have 0.26 shares, okay? Because we understand, if you look over here, you see dollars. Let me blow that up for you guys. And scroll over. And where'd it go? Never mind. There it is. It won't let me blow it up that big. But if you can see dollars here, you can change it to shares. So shares, as the market is fluctuating, is going to cost you $2,000, okay? But if you're doing dollars, it doesn't matter. You can invest in $5 and up, $5, $10. Let me show you what I'm talking about. So over here, I spent a little money. It says cost $416. So I only bought 0.26, which is roughly a quarter of that stock, right? At $416. My total return has already been over 30%. You see this number right here, 30% at $128, okay, roughly $130. So I'm even making money, I'm even earning money off owning a quarter of a share, off of owning a quarter of a share. So even in fractional investments, because you don't have $2,000, but you got $100, you got $200 that you would like to invest in Tesla. And guess what? Tesla is doing the damn thing. They're up at 2.4. Now, granted, for a large stock like that, that's great profit because guess what? You see how it's fluctuating right here? It's telling you at 2.5%, that's $50. So let's look at Tesla in the past month. Boom. Boom. Almost $500, $450, 28%, okay, in the past month. And Tesla is still doing it. So the electric vehicle market is a beast. I'm going to go back to NEO, okay? Let me look at my NEO option because I have NEO option and I have NEO stock. Right now I'm making, because again, I bought these options last night. I'm already making $96 at 36% off my two options that I bought with NEO at $262. Let's go back. Let's look at my individual NEO stocks. This is the one I like to hold, okay? This is the one I've been holding. Look at this. 68% return, $1,300 total return. Great investment. I have 231 shares. It's roughly almost half of my portfolio. Okay. Am I going to keep NEO for the long term? I just don't know. I am actually looking at the market, looking at analytics, reading news to see if I need to dump some of these shares. It's kind of like what Warren Buffett did when he sold IBM, right? He didn't see the growth there. He didn't see the potential there. And the one thing that he always looks at that I try to teach you guys is the PE ratio, okay? The PE ratio basically tells you, and I did a video on it, you probably have to go back maybe 2 or 3 weeks, if a stock is overvalued or undervalued. So listen, if a stock is undervalued, those are the stocks you want to invest in because eventually the market is going to start valuing them at the price that they should be, and you're going to make good money. If a stock is overvalued, look for those stocks to be sold and the de-evaluation of their share price, okay? So anyway, ladies and gentlemen, that's all I have for you guys this morning. I might get on later on today and probably just rant. Who knows? Every now and again, I like to get a lot of things off my chest, especially with all this election stuff. But anyway, this is Financial Literacy 101. Learn money and be inspired. If you check out the new shirts, I've been showing the new shirts off. I don't know if you can see that, okay? But they're down in the description below. I also have a new line coming out called Financial Literate. They come in a lot of different colors. I hope you guys like it. But anyway, you guys have a great and wonderful day. And don't forget, learn money and definitely be inspired. I'm out.